Well, good morning, traders. Welcome to followmetrades.com Saturday scanning session here on Saturday, August 1st, 2020, 8 o'clock in the morning here on the West Coast. And I don't know where you're calling in from, but I'm in Olympia, Washington, just south of Seattle, and it is a gorgeous summer day here in the Pacific Northwest. And I'm looking forward to this session very much. Make sure you can locate that chat box in the Zoom webinar platform. And some folks are already doing it, but type in where you're calling from. That way you can make sure you can use the chat box, and it's just fun to see where you're at. But hey, good morning, Susan. Hey, buenos dias, Joe. Hey, Christopher, Josh. And Salvador's calling in from Sweden. All right. David from Detroit. Jose from New York. Susan, Ohio. Hey, Tim from Kansas City. Brian in Chicago. Gene, Lincoln, Nebraska. And Jimmy, phoning in from Atlanta. Naresh, Gilbert, Arizona. Hey, Ranjit, welcome. John from Montana. I'm going to be driving through Montana in a week, John, on my way to South Dakota. Hey, Rick, New Hampshire. Ash from Texas. Yeah, I like Montana. Montana's beautiful. Okay, well, this is the Saturday scanning session. We're going to look for some trades today. Like I said in the invitation, I quite often on a Saturday morning like this grab some coffee and take a look at the markets and figure out what to expect for the upcoming week and try to find some candidates. And that's what we're doing today. So I'm set. I got my coffee, got my trading platform loaded up, and you guys are here. You can just watch along, see if we can find something. You know, finding great trade candidates can be like a needle in a haystack, right? So we're going to try and make that a little bit easier. Because there's 8,000 publicly listed and traded companies in the US and then hundreds of ETFs on top of that. How do you find a good trade? It's a challenge, right? I'll show you how I do it, and then I'll share some of the trades that I find. And, you know, if you're interested at the end, I'll extend an offer so you can follow along with those trades this upcoming week and into the future if you're interested in. And hey, Mark, good morning, Elliott, Alexei. All right, we're going to be looking at real charts. I'm going to be looking for trades, but I'm a trader. I'm not a financial advisor. I'm not giving financial advice. All trading and investing involves risk. You guys all know that. So I'll offer my opinion, but you know, each person needs to make their own decisions. And of course, I would suggest using risk management at all times. So if you are new and you don't know who I am, I thought I'd take a moment and introduce myself. And I will turn the camera on for just a moment. So good morning, I'm Dean. I'm the guy in that picture there. It was taken about 5 years ago, so I got just a little bit more gray than in that picture. But hey, welcome. I'm glad you're here. And I'll turn off that distracting camera. So I'm a trader. Like I said, I've been trading and investing the stock market over 25 years now. It really started when I worked for Intel Corporation. I got stock options, employee stock, and I joined there in '93. And if you remember, that was the kind of the leading edge of the .com boom. And it wasn't too long before that was worth some real money and caught my attention. Started trading stocks, traded through the whole .com bubble. During that time, I went and got a MBA from the University of Washington. And I was initially a fundamental trader, analyzing companies and financial statements. And I got mixed results on that. I actually got frustrated, totally gave up on the market in about 2007, went to cash. Couldn't stay out. I was still, I was hooked. But that was just lucky that I got out before the crash. I got back in and I got into some winning trades like Bank of America, got in at $5, went to $12. It was awesome, but I was stressed out because I didn't know how a trading system. I didn't know how to manage that. You got this fear and greed, right? If there's more profit there, I want it, but I don't want to give back what I got. So I got interested in technical trading about 2010, made a bunch of mistakes, went down a bunch of rabbit holes, chased some of the empty promises that so many vendors make. But about 2012, I finally settled on my current trading system. I started getting consistent profits. And the key thing in turning that corner to becoming consistently profitable was risk management. And I was mentored by a great guy named Bennett McDowell, who runs traderscoach.com. 2015, I launched this company that I have now, followmetrades.com. We've been having a ton of fun and getting good results. So that's just a quick intro. If you don't know who I am, if you haven't been to one of my sessions before. My results and more information are posted on my website. It's followmetrades.com. Here's a shot of the homepage. I believe in complete transparency and accountability. So I list the results that I'm getting year by year here in a summary table, and below this there's a button for each and every year, and you can click on it and see the actual trades that I'm taking, that I took to get those results. We had a really good year so far. You can see every trade we took so far in 2020. And these results are audited. I have a third-party CPA firm. When I post the results on the website, I send them my brokerage statements, and they, there's a button here somewhere. There's a, where is it? There we go. They produce an audit report and say whether, I actually traded those trades in my brokerage account. Of course, I'm going to the trouble to be audited. I did. So that's what we're really doing. Hey, Shiv's here. Good morning, Shiv. And Stephen, Elliott. All right. Bit of housekeeping, how we're going to do this. And ask questions as we go along. This is interactive. We're just a bunch of traders here looking for some opportunities in the upcoming week. I'm going to explain the trade setups I'm looking for. I'm going to walk through my scanning technique. I'm going to try and find some candidates. And I'd be happy to analyze any stocks that you're interested in. I might just like some of your ideas. I often get trade ideas just like this, but I may not like it either. So don't be surprised or disappointed. I'll summarize the candidates at the end, some actionable trades for next week. And I'll extend an offer if you want to follow along on an ongoing basis. So stay with me if you want to get the most out of this. And again, ask questions, make comments, make it interactive. Before we jump in, I just had to have fun and look at this chart. This is Kodak. How many of you were following along with the Kodak scene, right, last week? Of course, the big news was, Kodak was been drifting along at $2.50 forever, having kind of missed the digital revolution. And all of a sudden it was announced that, hey, they're going to shift over and start making chemicals for drugs in the US, and the government gave them a big loan to get started on that. And it was crazy, wasn't it? And so when that news broke, it went from $2.50 to $10, a 4x move, 4 times move. And then you thought that was incredible. And then the next day it went to $60 at a high. You can see this wick up here. We were looking at this in my trading room, and I was like, man, I really want to short this thing. Shorting the shares on something this volatile would be a bad idea. So I really wanted to just go buy some put options. And we looked, and they were ridiculously expensive. To short it up here with a put option would have been about $1,200 a contract. The IV was implied volatility was about 300%, so it didn't make any sense. But it would have been great because look, it's dropped from $60 back down to $21.85. It was just a crazy thing. It was fun to watch. But the point in this was, even though I really wanted to trade this, and I was pretty sure there'd be a good pullback, I couldn't find a trade setup that had the reward to risk and made sense and hit my criteria, so I passed on it, right? We just don't have to trade every single opportunity if it does not make sense. And that's what helps keep us successful. That's how disciplined traders operate. David bought it August 20th, put on Thursday. There you go. So that would have been here. I'm pretty happy so far. We looked, they were expensive. You had to pay for those. But it looks like it worked out for you so far. All right. So I just wanted to have fun and look at that before we jump through the rest of the material. And I like quotes, smart people. Here's Benjamin Disraeli said, the secret to success is being ready for your opportunity when it comes. And trading is, it's like fishing, right? You got to be patient. You got to be ready and know what you're looking for, and then kind of wait for it to happen. Louis Pasteur, in the field of observation, chance favors the prepared mind. So that's just some ideas that apply to trading. I think, you're not going to, Monday morning log into your trading platform, look at the news, and go find wow, look, Kodak's in the news, let's go trade it, or Tesla or whatever. You have to have a plan and be prepared. You kind of know what you're looking for, and I'd like to stock these trades ahead of time and then wait for them to hit my criteria to come to me. Right. And I've also learned to be a consistently profitable trader, you need a plan, right? You got to be prepared. And these three things are essential for any trading plan, regardless of whatever indicator setups you're looking for. You got to have a high probability outcome. You got to have a better than even, hopefully 60, 70% chance of it working out. I believe that great trading systems have a good reward to risk ratio, meaning if you're right in your thesis, in your setup, and it goes and hits whatever target you establish, that you will make more money than if you're wrong and it gets stopped out, right? So high reward to risk. And for that reason, and I might have a couple people hang up on me right now, but I never trade credit spreads because they have a terrible reward to risk, right? Credit spread, for those of you right? You sell one option, you get more money for it, you buy another option to protect it, and you make the credit up front, and you make per pair $100 or something like that. But if it goes wrong and it gaps through your numbers, you could lose $400 or $500, and that's got a 4 or 5 to 1 risk to reward. I don't like that, so I don't trade those. I look for things that could win 4 times as much as they could lose. Just makes more sense to me. Got to have risk management. You got to have trade management. Any system, any indicators you use, and I think you got to have all these elements, right? Here's some tools that I look for. Here's the indicators and tools that I look for. I use Dow theory, looking for a proven trend. I use Ichimoku Cloud, which is really just a kind of a sophisticated way of using moving averages. And I also use standard moving averages in conjunction with it. And I use a very simple, repeatable version of Elliott wave, looking for either an impulsive move or a corrective move. Simple, none of that detailed, complex nonsense that you'll find on some applications. And you'll see me use it here. Overriding criteria, I got to have a high probability outcome, and I got to have a good reward to risk ratio. BPM says, if I tried volatility stops, no. I use price action for my stops, and I use a specific formula then to calculate my position size. So let's look at Dow theory real quick, just a simple version of it, one portion of the overall Dow theory. Right? A bullish trend is nothing more than a series of higher highs, higher lows, higher highs, higher lows. Right? As long as this happens, as long as these lows aren't taken out and subsequent moves put a new high, you got an uptrend. Downtrend, lower low, lower high, lower low, lower high, lower low, lower high. As long as that pattern continues, it's a trend, right? Pretty helpful. I mentioned, earlier, before I had learned a lot of this and started using it, I was in a Bank of America trade. It was at $5, went to 12, great profit, but I was stressed out. I didn't know when to get out. If I'd known this, it's kind of easy to know when to get out. You get out when one of these prior lows is taken out. You put a stop here, right? Because that means, right, when you take out those prior lows, it means the trend is over. It's changed, at least for the near term, right? The trend begins when you get a high, higher low, new high. Trend ends when you don't put in new highs, take out prior lows. Same thing for a downtrend, right? Low, lower high, new low. Trend begins. Oop, didn't put in a new low, check out prior highs, trend ends. That's just a simple application of it. I use Ichimoku Cloud. You can see it on the chart here, right? Again, it's using some specific formulas and ways of calculating some moving averages, but it does a great job of predicting trend beginnings, and you can combine that with Dow theory, and it predicts support and resistance areas, the shaded areas, the cloud here. So I use that. You can see it predicts pretty well what these support areas are going to be. I use a simple version of Elliott wave. So, here's this idealized pattern, right? I'm just trying to trade wave 3, the big impulsive move. Sometimes I'll trade the correction, wave 4, and then the continuation of the original trend, wave 5. The rest of these are too difficult, too small often. So I just, big move, correction, continuation. That's all I'm trying to trade. And that's enough. And it works just the same way going down as it does going up. So I look for a big move, confirm it with Dow theory, confirm it with Ichimoku Cloud, apply my trade management techniques, and then ride that trend. And then when it's correcting, if there's enough profit there, take that trade too. Okay. Risk management, there's a lot of approaches to it, but any risk management, you got to determine how much you're willing to lose, a pain-free level on any trade, because any trade could win. I suggest 2%. That 2% is not the capital in the trade. It's how much would I lose if the trade hits my predetermined exit point, my stop. And that doesn't imply that you have to have a stop market order in place. It just means you have a price level predetermined at which you will exit the trade without fail. And we lose no more than 2% at that stop. You got to have great trade management. Once you're in a trade, I think it's important to have it already scripted. When am I going to take profit? How would I add to the position? And there's a way to do that without adding risk. You got to stay with winners, right? As long as possible. Everybody's heard, cut your losses early, let your winners run. It's incredibly difficult, right? When you get in on a winning trade and you're in profit to, there's a natural tendency to go, I just want to take the profit. I don't want to give it back. Right? But you got to let those winners run. It's going to turn your overall P&L much more healthier toward the end, at the end of the year. You got to exit the trade at the right time, right? So I just trail my stops. I use price action, Dow theory, higher highs, higher lows, higher highs, and I get in, right? I put my stop at the higher low, and as new ones are established, I trail my stop. So, and then I get out, and I take profit along the way. All right. So there you go. Scott says the losing stock owes me kind of mindset is absolutely dangerous. Yeah, you can get into that kind of mindset, right? You can have an individual stock. I'm going to get it back, right? Those guys got me. The market doesn't know you're there. They don't care about you. It's impersonal. Just trade your system. And you got to accept some trades are going to fail, right? Even a great trading system winning 70% of the time means 30% they're going to be losers, and you got to control that, right? So here's how I scan for stocks, how I go find opportunities. The first thing I do is just step back and do kind of a big picture. What's going on in the overall economy and the market? What are the things that could be affecting the market? What's the big trend? And I create a thesis. Well, I think this is what's going on and what could happen. Now, this could be wrong, but it's okay. But it helps me narrow, the 8,000 publicly traded stocks and several hundred ETFs down to a manageable list. Right? So I create a big picture of what's going on. I create a thesis. This is what I think. This is where I think the opportunities are going to be, long or short. Narrow it down. I've got my trade set up, so I just walk through the tools I use and I go look for trades. So let's do it, right? Let's go see if we can find something. Here's my big picture, kind of observations on what's going on right now. Here's a shock. Joe says, please click the radio button so I can see all your comments. I'm not sure what that means. Yeah, I'll just move on. So, hey, coronavirus, it's still a thing. The indexes have gone up surprisingly from the March lows, but we're going to look at those charts in just a minute. It looks like they may be running out of steam, right? The Fed, FOMC, they're standing pat. There's nothing new for now. They're going to use all the tools at their disposal, right? But they're not changing interest rates because they're near zero already. There's no big economic reports coming out this week that could move the market. We got the standard unemployment new claims. I think everybody's kind of numb to that. Gold and crypto are rallying. Even with the market going up, investors seem to be seeking safe havens. So that's super interesting. I think individual stocks are where the action is. And I grouped them Corvid plus, Corvid minus. And so some companies are benefiting from, the current situation. Apple, Amazon just put in amazing numbers, and their stock is, Jeff Bezos added 13 billion to his net worth in one day. And there's some companies clearly that Corvid's hurting. So that's going to play as I look at a stock. I'm going to go, is this a Corvid plus or minus? And then beware of the ants. These newly minted Robinhood day traders. You know, we see that on Kodak. We saw it on Carnival, American Airlines, some other stocks where it, you know, the thesis in the press is that a lot of people who were involved in, you know, casinos or sports gambling or whatever, you know, or just were interested in the market because, you know, things had changed, you know, opening up Robinhood accounts and are day trading and are injecting some uh, uh, unexpected moves into some strange instruments. I mentioned some of them. You know, there's a few others, but you know, when you see that, like with Kodak and with American Airlines and Carnival and stuff like that, be very careful when there's something really radical going on. I look for orderly markets that are doing something reasonably right. And you know, back to the first bullet, the indexes had recovered, but and so I'm watching the indexes very carefully, especially the Nasdaq and the Russell. It just looks like weakness, unless you know, Hertz. Yeah, Scott. There's another great example, right? Everybody's buying up a company that is in bankruptcy. Not everybody, but a large group of day traders buying up Hertz while it's in bankruptcy, and they were so excited about it, they wanted to issue a whole bunch more shares, and we're on the verge of doing that when SEC said, really, you're going to issue shares to people who will get nothing because you're in bankruptcy and shareholders are last in line and you don't have enough to pay your creditors? Is that a good, you know, is that good fiducial responsibility? And they backed up. Good thing, because that would have been bad. All right. Mark says, do you think it's too late to get into gold? Well, let's look at a gold chart in a minute. And I just let the price action and my tools, you know, answer the question rather than a kind of a gut feeling. Right? So there's Kodak. I said we wanted to look at the indexes. You know, the most tradable, the easiest way to trade the indexes, unless you're doing futures, is with ETFs. So here's QQQ, the NASDAQ, the big NASDAQ 100. So here's the big move up. Hard to miss. Right here, this big move up, and it was a series, Dow theory, right? Higher highs, higher lows, unbroken, all through this recovery. It was remarkable. It's hard to draw with a mouse. Look at that. You know, even though there were pullbacks, they didn't take out prior lows. But then what just happened? We got a low, a lower high. Didn't go on to a new low. And then this week's action, a lower high, still hasn't taken this out. If this rolls down, right, we could have something like this going on. That would be very tradable, would it not? So that's got my interest. And where would it go? We don't have to guess. I just use Fibonacci retracements. And what would be a reasonable retracement for this move? Well, here's the kind of the target zone, 38.2 to 61.8 Fibonacci retracement. We got the 200-day, this heavier white line right in the middle. So I would, you know, that could provide real support. It quite often does. So right in the middle of this zone, we got the 200-day moving average. I would set a target for this retracement at about 219.15 on the QQQ, which would be a really nice short trade from 265, particularly if you were doing it with options, right? It would be really, really nice. So that is interesting. What about the Russell? A good way to trade the Russell with the IWM ETF. Weakness, right? It's showing after this amazing run up and higher highs, higher lows. Now it's channeling it, and it, you know, particularly over the last 2-3 weeks, it has just been in this narrow channel. If it were, you know, so I put a stop up here. If it were to break this channel, break out of this lower end, we could end up with a target down here in the middle. Not bad. All right. And David said, what are some of the negative catalysts that I see in the near future? Earnings. You know, we had some Corvid Plus companies. You know, last week was the FANG announcement week. You know, Facebook and Apple, Google. and they put in some pretty good numbers, but they're a pretty small part. I think a lot more companies, last quarter they refused to issue guidance, and this quarter, the numbers are coming in. Most of the earnings numbers are bad, right? So continued bad earnings and continued high unemployment. The GDP number, if you heard it last week, negative 32.9, I think was the number. Historic, biggest negative number ever, right? So I think all this stuff might start to come together, and this optimism may just fade. Right? And there's Jay says the same thing, right? And there's just COVID fatigue, and people are getting tired of it. And we got the election, right? When the election happens in November, all bets are off, man. There will definitely be a reaction either way. I was actually running a trading room, my trading room, in 2016 when the election results were coming in, man. And you should have seen the indexes in gold. The S&P 500 futures, aftermarket, and gold. They were swinging like I had never seen. It was incredible. And we actually made some money on that, just short swing trades in minutes. All right, we're off topic. So that's kind of the big picture. And again, I think the opportunities in individual stocks, and then if these indexes start to move down, there could be opportunity just in trading these indexes. And let's talk. We mentioned gold. Let's talk about gold. Here's gold. I had a price target for gold. This is just based on a simple Elliott wave analysis, right? This was the original impulsive move. Here's the correction. Here's the continuation. The target was these green lines. It went through the target. I think it's a little late right now to chase gold. So I'm not going to. This could continue, but I like to get into trends. Like, for me, this would have been a good entry level here, right? Or even here, right? As we came out of here's the correction, as we started high, higher, low, new high. This would have been an interesting entry level. We could have wrote it. I didn't, but I think this is a little late, and there will be a correction. And after that, there could be another opportunity. I'm going to just sit gold out for now. All right. So, hey, Mark, you are welcome. You are welcome. So what do I like right now? Well, I maintain a watch list because as I scan and find trades, put together, I'm using TradeStation here. This is radar screen, my watch list, right? These are things that are interesting to me, and I got some notes over here. When did I start watching it? What's the entry price that I'd be interested in? Am I long or short? Now, this doesn't mean I'm going to trade it. And I got some notes over here. Hey, this could be a new trend. Review it if it's triggered, right? I looked at GE. I said my price to come back and look at it would be 722. I got an alert set. Well, guess what? I set that on the 24th. That alert was never hit, and in fact, it crashed. So that's not looking so good right now. So I don't take the trade. Right? I just don't take the trade. I'm waiting, like I said earlier, I'm waiting for it to come to me. And Jay says, hey, how'd you set up those extra columns? I painfully learned how to write easy language, and I wrote my own indicator for that. So that's how I did it. And I'm not a coder, but I was able to figure out enough to go create that. And if you, Jay, I know, Jay, you're an existing customer, or anybody else is a customer, if you'd like that indicator for TradeStation, shoot me a note. I'll send it to you. And Scott says, why trade stocks under $10 a share? Why not? Why not? I don't want to offend you, Scott, but it just sounds a little arbitrary to me, right? The price per share, right? The market cap, the value of a company is the price per share times the number of shares outstanding. And the board of the company often does splits and reverse splits to have the stock price in some target range that they want. What's the market cap of GE, right? It's huge. It's huge. Um, so I'm more concerned when I look at when I'm looking for a trade in the market liquidity. I want it to be a real company. I don't trade penny stocks, and I don't trade stocks with thin volume. Thin volume can be more easily manipulated. If there's a company that trades 10,000 shares a day, that can be manipulated. GE traded 142 million shares on Friday, right? It's got, hundreds of thousands of people holding the stock in large institutions. That's hard to manipulate, right? So I don't think it's a function of price. I think it's a function of market cap and liquidity. That's my opinion. Okay. So I'm happy to trade GE even though it's under $10. I've heard some people say $20, right? It doesn't bother me a bit. I don't trade over the counter. I don't trade penny stocks, and I don't trade things with low volume. So here's some of I'm really interested in Bank of America. Right. By the way, I told you I traded Bank of America, one of my first trades post crash, at $5. So the Bank of America was under 10. Did that make it a bad thing to trade? It wasn't for me. Mark says Kodak traded 275 million shares. That's true, right? And actually, they have good liquidity. Now, the price action on Kodak was nuts, right? And you have to be very, very careful. But with good liquidity, you can, the important thing is when I get out, I want to get out, I want to be able to get out and have a reasonably tight bid-ask spread. Okay, on my watch list is Bank of America, and it looks ready. What do I see? A huge correction, a lower high, right? It looks like it's in an uptrend. It pulled back a little bit, and this just could be a great opportunity. I got a target set at this prior high, which is right around the 200-day moving average, which is this white line. Price has just gone above the Ichimoku cloud and just gone above the 50-day moving average. My oscillator has turned positive. This looks like the next leg of this uptrend is about to happen. Now, it could fail at this big pivot, right here. That's why I got my target there. So I'm saying, 2866 is my target. If I get in at current price, and I'm going to put my stop, like I said, under this prior low. If you were here earlier, I talked about reward to risk. So if this Bank of America trade fails, what's my risk? It's the difference between my entry and my stop, which is about $1.80, about $1.80 a share. If this thing makes it, if it goes from my entry to my target, right, well, that's great. That's like $4. That's about a 4-to-1 reward to risk ratio. I'll make 4 times more if I'm right than I will lose if I'm wrong. That meets my criteria. I like it. And Jay says, do I ever automate stops on options? There's a way, it's a multiple step way to automate stops on options. You never ever use a market order on options, but you can set up a conditional order to trigger an option limit order based on what happens on the underlying. Yeah, Steve, what's the wave count? So this is the big move. This is 3 right here. So we just look at the retracement, right? This is 3, and I think we're still in 4. 4 often has an A, B, C component, right? So I think we're in C leg of wave 4, and it could finish this retracement up into here. That's the simple wave count on Bank of America. All right, so that was on my watch list, and I'm, that's a viable trade for Monday. So what about new things that aren't on my watch list? So I said in my big picture, my thesis was individual stocks. Sometimes we'll come to the conclusion that there's a sector that we should go look at, right? Maybe in the trading room earlier this week, we were kind of interested in the cannabis sector, and we ended up taking a trade on the ETF, MJ, long trade. And that looks like it's going to work out pretty good. Sometimes we're interested in energy. But in this case, I just think there's individual trades. So what I've got here is radar screen. I ran a scan. And what I did, I've got this scan set up, and TradeStation's got this scanner. It's pretty cool, right? And I said, you know, I want you know, I want real companies. I don't mind a low price company, but last price over $2. I want average volume on a 10-day basis to be 1 million shares. I want a market cap of at least 1 billion. And then I want it to have crossed the 200-day moving average within the last less than 3 days, right? So what does that mean? I'm looking here at this scan going, I want to look at things where something new happened. And the 200-day moving average is probably the most popular on a daily chart for stocks. So if a stock crosses the 200-day moving average, that is something new. FMT is Follow Me Trades, Oswald. It's my company, just an abbreviation. Jay, yeah, I made these scans. And I made a custom indicator for this FMT SMA cross. What this shows is how many days since it crossed and how far is price from there. And then I use Ichimoku Cloud, and I can look here and go, okay, if we had a cross, and it tells me if it's below or above, and we had a cross, right? What if, is it above the cloud or is it below the cloud? Because if we get it just crossing the 200-day and just going above the cloud like we see on Bank of America, look back at that chart for a minute. That's a big deal. And this one actually didn't cross the 200, it crossed the 50. But it went above the cloud just as it crossed the 50. That's a big deal. That means something new's going on, right? Last time that happened was here, and that was this big leg. I'd like to catch a move like that. That would be awesome, okay? So this gave me some candidates. I went from 8,000 stocks and ETFs down to a list of 53 candidates by running a scan that took about 30 seconds and based on a thesis. So let's see if any of these look good. So I've got it linked here, right? So I just click on down, it's going to come up. Okay. Now, this looks really good. And I'll show you the wave count, right? And, once you do this about 10,000 times, your eye gets trained. This is the impulsive move. Everybody can see this was just based on the data on our screen, right? This was the biggest move. That's wave 3. I don't need to overcomplicate it any more than that. This was the correction. And now look, low, lower, high, low, lower, high. Now it went above there, but the big picture on this current move is low, lower, high. It's heading down, and it just, a couple of days ago crossed the 200, and now it just crossed the 50. Hasn't crossed the cloud yet. So that for me is a watch list. And what I'll do is I'll just draw a horizontal line. And as this thing head down, you can see the top of the cloud's rolled. It's going to narrow. And here's this prior low. So I go, I'd be interested in this one. And if it were to take out this prior low, and if it were to cross the cloud, so that's $39. So I'll just put it on my watch list. I'll put an alert. So if it happens, I'll get alerted. And I'll make a few notes here for myself, so when I come back and look at it, I know what I was thinking. This is short. Wave 4 down. Bugs me to have a typo even when it's my own notes. And I had an error here. Entry price. Got to put a price in. All right. And I save it. Will I take this trade? I don't know. When it triggers, I'll go look at it. And David is asking, David's asking, am I using options or just buying the shares when I initiate the trade? I prefer options, right? This setup can be traded either way. Right? Everything's based on the chart, right? So our projection for this, by the way, we're looking at a wave 4, or wave 5 rather. Our target zone is down in here. You can just short the shares, but I prefer, I would just go buy a put option. Jay says, any way you can see alerts that were missed because you're away from your computer. Well, TradeStation is cool. You can configure it so those alerts are sent to you in a text message. So I do that. Oh, and that's a nice endorsement. Scott says my master trader course is worth every nickel. Well, thank you. Glad you got value out of it. All right, so we got a candidate here that I added to the watch list, Dow, from the scan. Let's see if there's any more. That was the first one. GoDaddy. Now it's above the 200-day moving average and it's in the cloud. Okay. GoDaddy. All right. So you can see there was this big move, but that's then it retraced more than that move. So this is the new impulsive wave 3 and it's in a correction. And I would bet that it's already retraced into the target. So it's got a little too late, but there is, it does look like there's some evidence, some early evidence of it heading up. So here's the big move, wave 3. Here's the correction. Now we're looking at a target, you know, up. Now, we got 2 up days, but what we don't have is what I need to confirm an uptrend. Remember, an uptrend is higher highs, higher lows, new highs. We did have a good downtrend in the correction. So far, this is just a higher high. I need to see it do something like this. And if it does that, I'll put a stop here, put a target here, enter here. That'll be a good reward to risk ratio. It'll be a good trade. But this one's a long way from developing. We got to have all this happen. So that's not even going on the watch list yet. And I could see that in about 5 seconds, but I wanted to show it to you. That's not to brag. You just, after you look at, again, 10,000 charts, you can kind of see these patterns in a few seconds. And in my course, I teach you how to do that. LMT, Lockheed. It's below the 200-day. It's above the cloud. So immediately we got a little conflict in the indicators. And after the big move, it's just been in this, it's been a little chaotic. This was a low, lower high. It's above the cloud. It's below this. There's too many conflicts. I just reject. I don't need to trade it. Pub Joint Saint Mobile something. Pub Joint Saint Mobile Telesystems. Probably an ADT. Non-US company listed on the exchange would be my guess first pass here. I don't know anything about it. Before I put any money in, I'll go do a little research. But there's a nice pattern here. And it's once you learn these trade setups, they're really simple. Right? It's big impulsive move down, got a correction, starting to head down again. That's what we're looking for. And got a target. Down here. This could be good. Now, what's happened as it crossed the cloud? It is under the 200. We don't have what's called the death cross or the 50 crosses, but it's coming soon. But we got a little bit of a channel going on here. MBT is a Russian telecom, says Shiv. Thank you. So if this were to take out this low and break out of this little channel, it could be interesting, and that's at 868. MBT short. Now again, I would go do a little more diligence on it before putting money into it, but it's worth paying attention to. That was 868. Let's put an alert. Come on. And this one is short. All right. Dave says, with my options trading, do I stick to a certain delta length of time? Yeah, I like high delta. I go deep in the money, a delta of over like 65, and I like as close to 90 days as possible. I'm typically in a trade between 2 to 6 weeks, so I want 30 days on the back end of that on the contract. Right. So found a couple. Dow, MBT. Let's see if there's one more. See if there's a long. Anthem. Super expensive, 273 bucks. It's chaotic. Big retrace, big move, 100% retracement, going sideways. Doesn't interest me. BBBY. Yeah. Big move down, started the retracement, failed at the 200. It's sitting at the 200 again. And it looks like it's stuck. That's too bad. Let's see. Let me look at my cloud. Above cloud. Let me see if there's anything new. New above. SBS. Utilities. Never heard of them. It had the big move down. It had the retracement. Actually, the next move is down, and it looks like it's getting ready. Look how that momentum fell off. That wasn't really good. Ziono has no options, so that's not interesting. Duncan. Oh no, DraftKings. DraftKings. Duncan just announced they're going to close a bunch of stores, right? There was a big announcement on DraftKings, and I forget. I saw them on the headline. I don't know what it was. 14 million shares. Okay, this is interesting. So it had the big move. It had the perfect retracement. It's got a high, a higher low. So what we would like to see is a new high, and we got a target way up here. And you go, really? You think it's going to 48? I got existing customers on here. Isn't it amazing how it sometimes actually does? Not every time, but and David said baseball games keep getting canceled. Yeah, that's the backstory. The chart looks pretty good. The chart looks pretty good. So we'll review it. 3907. DraftKings, wave 5. 3907. What was that symbol? Is it 39.07? Was that the right price? Yes, 3907. Okay. All right. So you're walking away with some trade ideas. We got Bank of America, Dow, MBT, DraftKings. GE was kind of a scrub. I showed you the indexes, the QQQ and the IWM as some potential trades with some different levels there. So I think you got some ideas for showing up here. All right. Hopefully you were interested in those. All right. So if you did like those ideas, oh yeah, I was supposed to do that. Offer analysis on a handful of symbols. Let's do that. So Johnny said, Eric, let's look. Now, I may like your ideas. You may have a different trading plan than me, and so it's okay. Erickson, right? ADS. So it's had this big run. And so I would not chase it now. You know, if you got into this early, it's remarkable, right? It doubled from the bottom. It doubled. Um, I would not chase that up. And we got this lower high. So, you know, if you're in it, I would put a stop pretty tight under here, you know, about 1129. I would not get into it long now. I would wait for the correction and then the next move. That's what I see there. GB, silver, SLV. Same story with silver. I mean, silver, like gold, has rocketed. Silver more so. I would not chase it. I would not jump in now. This trend is, you know, awesome, but I think it's a little late, and it's also starting to roll over. If I were in it, have a pretty tight stop under this low, and if it hit that low, if you are in it, stay with it. It might go higher, but I would not jump in new. Yeah, Anthony, this is being recorded. We'll send it out to everybody registered. Stephen, Micron. So it had this big move down. It had the retracement up, and now it's just channeling, going absolutely nowhere. The next move, look at this momentum has gone completely out. The next move would be likely down, but it would have to break down through here before I would be interested in trying to do it. Sari, Tesla, we can never do a webinar without looking at Tesla. Well, what do you see, right? It had this big move up. Everybody was impressed, right? It has pretty clear evidence, low, lower high, low, lower high, heading down, right? The retracement zone is down in here, 1083. I don't really like to trade Tesla because there's, you know, so the technical pattern here is clear, right? It's beginning a correction. There's too many, for one thing, it's expensive, right? Even the shares, you know, the options are just off the hook in terms of how expensive they are, right? And there's too many true believers, right, who will prop Tesla up no matter what. So there's a bit of an ant, you know, there's just better things to trade, but that is a clear down setup in my mind. I'm never going to get to all the requests here. I apologize. There just isn't time. Try and catch a couple. Mark says that down here, this is just a momentum indicator, a price oscillator. It's not money flow. It's not MACD. Cyber, SYBR, or CYBR. It's kind of a chaotic chart, and had this big move, had this retracement, started down again, then broke up. So it doesn't, you know, that's one of the things that frustrates people with Elliott wave is they go, well, what is the wave count here? Well, on a chart like this, there isn't one, right? It's going up. It took out prior lows. What's the target? I don't know. So for that reason, I just wouldn't be that interested. And it's, you know, only traded 400,000 shares on Fridays. So it's not the, you know, not really liquid enough for me. Susan, what about CAT? What about CAT? I saw a headline. They said, yeah, things don't look good, and they don't look good. They look like they won't be good for a long time. They dropped 3%. Same kind of comment though here. I think there's cleaner, more orderly charts to trade than CAT, and it hasn't, you know, met my rules for a correction yet. And if it were, I struggle with a target on this one. So there's just nothing there on CAT for me. The good news is there's so many to trade. We can be very, very picky. So Microsoft is beginning to correct. You know, I talked earlier about the target, right? There was 3, 4. We drew this target back here. Bam, right into it. But now it's correcting. Low, lower high. Low, lower high. After hitting wave 5, there's typically an ABC kind of correction. They're a little hard to trade. They can be erratic. So I don't try, but typically you get some kind of ABC like this, right? But again, they can be a little volatile. I'd rather just trade something I'd rather trade 3, 4, or 5, a little more orderly. One more and then we got to wrap it. Sorry. Shiv says Tesla's one Elon Musk tweet away from either direction. Yeah, and it can just be crazy. IBM was a good one. Let's look at it. And then that'll be the last one. All right, IBM. Big move down, had a correction, looked like it was heading down, went up, then corrected big time. Now it's showing weakness again. So IBM, I would have to be convinced, right? It's getting there, but we could take an entry, you know, down here. We'd have to have a stop. We'll see, you know, right now the stop's gonna have to be clear up there, but it still has this target down here. So the reward to risk is about 2 to 1. I'm not sure if I'm that excited about it, but it is starting to head down. Okay, well, we've almost taken up a full hour, and hopefully you found it valuable. Got some ideas. And, you know, if you're interested, I'll let you know how you can continue along with me in the upcoming week and going forward, all right? So finding great trades is like, you know, a needle in a haystack, but we managed to do it. We found some good, interesting ideas. Remember, these 3 things are essential. You've got to have good setups, good risk management, good trade management. You guys agree with that? No matter what methodicators you're using, would you agree to maybe press the raise your hand button or type it in? Yes. That, you know, you got to have good trade setups. You got to have risk management. You got to have trade management. Yes. Everybody's agreeing. Nobody would disagree. That just makes sense. All right. How many of you were excited about some of the trades that we just looked at, some of the candidates? Did they look good to you? Maybe you're a little unsure about how to act on those. Jose said he learned a lot. Good. I thought it was interesting. Mark's interested. Okay. How many of you felt like this dude's like, man, that was a lot of information. Drinking through a fire hose. Stephen liked it? Good. All right. So I'll spend a few minutes going over a special offer that you can follow along and get some tools in your hands. Hey, John, you're welcome. So remember, you know, you got to have great trades. You got to have great trade setups. You got to have risk management, all that stuff. You need a plan, right? And I have a stock pick service to get good feedback from the customers. You know, you get winning picks. Average monthly returns on a $50,000 account been about $1,900. You get detailed trade consultation in a trading room. You get a one-on-one consultation. You get ongoing education and tools. I provide you some risk management tools and training for options. Right, all that stuff together. That's worth some real money, like $5,300 if you were to buy that individually from the average educator. I'm going to offer all this. Ongoing education, access to help with winning trading system, and it's not going to cost you $5 grand. All right. The list price for the service on my website, $127 a month or $1,524 a year. It's great value at that price. Offer for you today in this session is take a 30-day trial for $37. After the 30 days, $7 a month if you stay. 100% money back guarantee. I just posted a link. So try it for 30 days, $37. And if you like it, you stay, you get discounted rate. You don't like it, 100% money back guarantee. Refund on request, no questions asked, no hard feelings. So that is available for you guys right now. What do you get? You get the watch list that I just, you saw me edit. I put that up on the website. You have access to it. You get alerts, text message, email when I get into a new trade. You get the exact details of every trade, entry, stop, target. Most of the trades can be traded either with the shares, if you like, or options. I provide an option contract selection. You get alerts, email, text message when I make a change, like moving a stop, taking profit, closing the trade. You get access to a live trading room Monday through Thursday, right after the open. You can attend that if you like. It is not required. You'll get the alerts either way. We do a recording of that, cap of that, so if you'd like to check it out, you can attend. We have a weekly live chat session Wednesday nights. You get a one-on-one consultation. When you sign up, you get an email and a link to my calendar, and we can talk, get you off to a good start. You get risk management, option trading tools and training on the website, some videos and material to help you manage risk and use my alerts to the full potential. You get an ongoing support and training. I'm here to help. And there's more. And Ray, you can see Ray's comment to everybody. He's a customer. If you're thinking about it, do it. Well, thanks, Ray. That's a nice endorsement. You know, I'm so blessed. I get really nice feedback from customers. I do my best to provide a great service. But there's more. If you sign up during this session, before I hang up, you take the trial for 37 bucks. You will get my Ichimoku Cloud course, proprietary cloud study guide, training videos, and some cheat sheets on how to use Ichimoku Cloud the way I do. If you use TradeStation, you can set it up just like I do. If you use Thinkorswim, I have a custom indicator that is included that you can download so you can use my settings. So you get 30 days of my stock picks and live trading room, and you get the Ichimoku Cloud, 37 bucks if you sign up during this session. Of course, you sign up for the service later, but this really good offer of the $37 trial for 30 days and the cloud course included for 37 bucks is now only. Anthony, thank you. Thank you. Nice testimonial there from Anthony in the UK. I believe you're in the UK, right, Anthony? I'm gonna go on mute. I'd be happy to take any questions. I'm going to stop the recording because the presentation's over. But if anybody's interested, you got questions, you know, now's a great time. I'll just leave this open and see if anybody's interested and want to act on that.